All promissory notes must be accompanied by a security instrument. Now, there are two types of security instruments, but a promissory note, depending on what side of the country you're in, is going to be accompanied by either a trust deed or a mortgage. The two main security instruments used in real estate, again, trust deed and mortgages. Trust deeds or deed of trust, that's what's mostly used on the West Coast. The borrower is the trustor, the lender is the beneficiary, and the trustee is a disinterested third party that will sell the house if the payments aren't made according to the contract. In these type of transactions, these are considered non-judicial foreclosure, meaning they don't have to go to court in order to sell the house. That's what a trust deed is. The borrower is the trustor, the lender is the beneficiary, the trustee is the company or the service that if you don't pay as agreed, that's who will conduct a trustee sale. And they don't have to go to court because trust deeds use non-judicial foreclosure action. And in mortgage, it's a bit different. Mortgages have judicial foreclosure. You see a lot of that on the East Coast. Very hard to foreclose on a person on a mortgage because they have to actually go to court. Mortgages are judicial foreclosure. Now, mortgages are voluntary liens on the property that are used as security for payment of the debt. The borrower is the mortgagor, the lender is the mortgagee, and it's judicial foreclosure. In order for a lender to foreclose on a mortgage, they actually have to go to court, and the judge has to order or issue foreclosure.